Okay, bro, welcome back to the fifth episode of our trading strategy. So today we are gonna talk about fair value gaps. Okay, so without further ado, let's go straight into the topic. So what are fair value gaps? As you know, price moves constantly up and down, up and down, up and down. Okay, but there are quite often times where the price moves up so fast, okay, that those orders in between that fast movement couldn't get fulfilled, okay? Like because the price moved up so quickly, the traders got surprised and they couldn't place orders at that time. You know what I mean? Or maybe before the move up, there was massive buying order from Warren Buffett, let's say, okay? So he put 10 billion euros into some stock, and then that massive amount of money in the stock caused the price to move up so quickly that the normal traders like you and I, we couldn't place our orders so quickly because the price moved up so fast, okay? And then when the price moves so fast up or down, it leaves a so-called fair value gap, okay? So basically fair value gaps are parts of the price movement that couldn't get fulfilled, okay? Those are the orders that couldn't get executed because the price moved up or down so quickly, okay? So let me show you what a fair value gap is, okay? So we are gonna create three candles, okay? We need three candles. Let's say this is one candle with a wick and a body. Then we have another candle like this, for example, again with a wick, and then we have the third candle, okay, let's say like this with a wick, okay? So the fair value gap now is actually the place between the first candle and between the third candle, okay? So this is our first candle, this is our second candle, and this is our third candle, okay? So as you can see, the price moved up so quickly that it left this place in between here. You see, this is a fair value gap. FYVG, okay? Because the wick of, let me show you, because this wick right now here doesn't touch this one, you see, and then this range in between, this red range, okay, this is a fair value gap, okay? Why? Because the price here in this range, okay, the price moved up so quickly that those orders couldn't get fulfilled, okay? Because people were trying to buy the stock, okay, for example here and here and here and here, and then the price moved up so quickly that they couldn't buy it here. So the next order that was placed was actually here on the top, not here in between, but here, 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 okay? So those are fair value gaps. The same thing can happen also on the downside. For example, we have one normal body here, okay, this is body and the wick, and then we have a massive order down, okay? Someone is selling all of the portfolio, so the price moved down so quickly, okay, that it creates this large massive bearish candle, and then another candle would happen right now here, for example, okay, like this. So what is a fair value gap? Okay, we have to take a look at the first candle, which is this one, and the third candle, which is this one, okay? And then we have to take a look that the wicks, okay, those are wicks, okay? The wicks don't cover each other, okay? So here we then have this space in between, okay? Look here, and this is now a fair value gap, okay? This is a bearish fair value gap, while this one here is a bullish one, okay? So what actually happened? What happened was this: people were selling here, 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 here. People were selling, But then this order right now here, okay, this last one, or let's say this new order here, was so big that the price moved down so quickly so that it surprised everyone, okay? And the next order that happened was actually then down here, and then here and here and here, okay? So this is a fair value gap, okay? Because here, those are the orders that couldn't get fulfilled because the orders that should be here were actually then down here, okay? So this is a fair value gap. And what does happen with the price? So the price usually goes like this, okay? For example, let me draw it again. The price will go down, up, down, up, down, up, down. And then it's gonna have a massive move up, okay? And then here we will create a so-called fair value gap, okay? This is gonna be a bullish fair value gap, okay? Fair value gap. And then what will happen with the price? The price usually goes down to the fair value gap, preferably to the middle of the fair value gap, and then it continues in that direction. Up, 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 down, okay? It went down. Let me move. It went down. What did we do? We created a bearish fair value gap, okay? We created a bearish fair value gap, and then the price went up, preferably to the middle, and then down, 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 okay? So yeah, this is how it goes. And of course, look, I know you are now thinking, wow, this is simple, this is amazing, this is nice, okay? Yes, it is nice, but that doesn't mean that you should always buy or sell when the price goes to the fair value gap, okay? We need to combine the whole strategy together in order for us to make informative, highest probability decisions, okay? Look, let me show you now the price also here on Nasdaq, okay? Let's go from yesterday's date. Again, we will mark, I'm gonna turn this on, my indicator, and we're gonna mark everything, okay? We're gonna start with this, with the sessions, and we're gonna finish until the end of the day, okay? Good. Let's start with Tokyo session. Let's go to Tokyo session. And okay, we can already see here, look, we have one candle, we have another candle, and we have the third candle, okay? So what is this in between? This is a fair value gap. And as you can see, the price came down, touched the fair value gap, went up a little bit, touched the fair value gap, and then it exploded, okay? Good, so this is a fair value gap. Let's keep looking. We are looking for 3 candles with the first candle and third candle wicks, okay, not to interfere each other. What do we have here? Here we have another fair value gap, okay? Here we have another fair value gap. Why? Because nothing is in between this candle. You see, the wicks don't cover each other. Then we have here another fair value gap. Look, here, okay? The fair value gap doesn't have to be the same color, okay? With order blocks yesterday, we had to have the same color for order block, but fair value gap can be one red candle, one green candle, and then one red candle again, okay? As long as we have the wicks that don't cover each other, as long as we have that gap in between the first candle and the third candle, okay? This is a fair value gap. Okay, and now you are asking, Yasha, but here the price went through the fair value gaps. What does that mean? Exactly, it went through the first fair value gap, it went through the second fair value gap, and then in the third one it bounced up. So what happened then with those fair value gaps that I showed you here? Like, what does that mean then? This means that we changed the fair value gap to an inverse fair value gap, okay? Which is actually, among with break of structure, one of the potential signals that we are changing the direction of the trend, okay? Exactly. So the inverse fair value gaps will actually happen the same as normal fair value gaps, okay? Let me go up to our drawings. Where do we have them? Okay, we have them here. Good. Let's continue here. Okay, let's continue here. So what is then inverse fair value gap? Just like the name says, it's an inverse fair value gap, okay? So we will go up, we will go down, we will go up, we will go down, we will go up, okay? Let me now draw a fair value gap because, actually not, let me keep drawing because here we have some picture down, okay? Up, 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 okay? Okay, good, we are here, and then we go down, we create a fair value gap, okay, let's say that, yeah, we created here again bullish fair value gap, okay, okay, here we created a bullish fair value gap, okay, so potentially now we could say, okay, maybe now we will start going to the uptrend, to the bullish trend. Okay, keep going, because we were here in a uptrend already, so maybe we will keep going. But no, the price then goes down and closes below this fair value gap. So this fair value gap is not a bullish fair value gap anymore, okay? But instead it's a bearish one, okay? Now it's a bearish inverse fair value gap, which essentially works the same as this bearish normal fair value gap. You see, the price will then go inside. Wait, let me take the brush. The price will go inside and then go down. Even though this was first a bullish fair value gap, then by closing below it, we changed this bullish fair value gap into a bearish inverse fair value gap, which works the same as bearish normal fair value gap, okay? So yeah, that's about it, bro. Like, there is one amazing indicator that I am using along with my own indicator, which is called this one, fair value gaps by Lux Algo. You can just use that one. I already have it here with my custom indicator. It's inside, and it's gonna mark all of the fair value gaps that happen, okay? And as you can see, the price perfectly jumps out of those fair value gaps, okay? And the size of the fair value gap doesn't matter. As long as we have a fair value gap, that's a good confirmation for us that the price might move in the direction that the fair value gap is showing us. You see, here we have tiny little fair value gap that got respected and went up, 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 up. You see? Okay, first, look, here it was a bearish fair value gap at first, okay? But then we closed with this candle above it, so this became now a bullish inverse fair value gap, okay? Alongside with the normal bullish fair value gap, this green one right now here. So that's actually a double confirmation, bro, that we might move up. You know what I'm saying? So it's an amazing concept. It's an amazing concept, and as you can see, the price actually respects the bearish fair value gaps. I mean, all fair value gaps quite good. You see, here we started printing bearish fair value gaps, the price went up, touched the fair value gap, and then it went down, okay? Preferably, you want that the price touches the middle of the fair value gap and then bounces. But even if it goes through the fair value gap, as long as it doesn't close below the fair value gap, everything is fine, okay? So those are actually the fair value gaps, bro. It's that simple. It's really that simple. So just to repeat it again, the fair value gaps are those imbalances in price, okay? Because the price, for example, here moved up so quickly that the orders here in between couldn't get fulfilled, okay? So what will the price do? It will go up, creates those fair value gaps, and then the price will go down, take those orders, and then start moving into the direction accordingly, okay? You can see it always moves down. Here, for example, it went down, look, where did it go down here? Let me take a line. Okay, here we have a middle. Look, the price touched here, okay? It touched fair value gap first with this candle, then with this candle, and then here it came to the middle, touched the middle of the fair value gap, and then bam, upwards, okay? Here as well, look, we came to the middle, we didn't close below the fair value gap, we went up. Here we went up, here we went up, here we went up, 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 up. You see what I'm saying? So this is essentially fair value gap. Quite nice concept, but again, don't just buy and sell whenever you see a fair value gap because you are gonna lose money, okay? Just like here, for example. Here you saw a bearish fair value gap. Why? Because this is the first candle, this is the second candle, this is the third candle. The wicks, this wick below here and this wick above here do not cover each other, okay? They don't touch each other. So that's why we have a fair value gap. So what will you do? Okay, you would say, okay, good, I'm seeing a fair value gap. I'm gonna go here into my position and then, wait, let me remove this. I'm gonna go here to my position. I'm gonna put stop loss here above, then take profit here down. And what would happen? You will get stopped out, okay? So don't do that, bro. Don't do that. We need to combine the whole strategy together in order for us to be successful, okay? That's about it for today, bro. Do the hard work and see you on top of the world. By the way, feel free to join also my Discord channel that I am posting my trades, my tutorials. We have self-improvement section as well. Let me show you everything. Right now we have 6 members, but it's fine. Look, okay, fuck this. Okay, so here we have the Discord, daily analysis, trading breakdown, self-improvement, motivation, meme lunch. Actually, we have our first emoji, which is this gurke with the joint and so on. So yeah, feel free to join, bro. Do the hard work and see you on top of the world.